Hello and welcome to the Cryptocurrency News channel. So, Fidelity Digital Assets recommended in a Tuesday report that investors should consider diversifying as much as 5% of their portfolios into Bitcoin. It says a disciplined 5% would position investors to capitalize on Bitcoin's potential growth while protecting against losses, the cryptocurrency unit of the mutual fund giant wrote in its latest report on Bitcoin's investment thesis, spotted Tuesday by Decrypt. So, Director of Research Ria Botera wrote that the crypto's current market capitalization is a drop in the bucket compared to markets Bitcoin could disrupt. Victoria argued that while institutional inflows may damp Bitcoin's uncorrelated performance, the crypto is fundamentally less exposed to economic headwinds than other assets will likely face. So I agree with that. I think even though it's correlated with the stock market, I think it would dip less than the stock market if something really went wrong with the economy. Bitcoin is therefore a potentially useful asset to basically, you can use it as a hedge for uncorrelated return-seeking investors. Consider a portfolio with a target allocation of 5% Bitcoin, she wrote. In a world where benchmark interest rates globally are near below zero, the opportunity cost of not allocating to Bitcoin is higher. Obviously, you can't get any money from the bank, so you want your money to work for you. So Bitcoin as part of that portfolio would actually be a very, very good idea, at least in my opinion. Now, the interesting part of this is that if Fidelity actually took that advice and allocated 5% of their assets into Bitcoin, that would be massively large. Remember, Fidelity does a lot of pension funds. They also do a lot of retirement funds. They literally have like $7 trillion under management. 5% of $7 trillion, well, that's like hundreds of billions. And if hundreds of billions were to flow into Bitcoin, that would massively, massively pull the market up. Obviously, they're going to buy into OTC, but if they bought hundreds of billions of Bitcoin, even OTC, that would actually affect the overall market because it's such a huge inflow, and that would pump the prices up. I don't know if Fidelity is really signaling of what they're actually going to do, but if this is what they're going to do, you really want to be into Bitcoin right now. And you can always be in Bitcoin first, but once Bitcoin comes up, all those other altcoins will actually come up afterwards. So right now, if you're listening to Fidelity, you should allocate some of your money into Bitcoin, because if Fidelity even allocates 1% of their assets into Bitcoin, that would be a huge, huge pump. And if they allocate 5%, that's going to be like a massive, massive pump. So that is the news for today. Fidelity making it look good, and maybe Fidelity will actually make it rain by some of this news. I know that a lot of investors actually do listen to these things by Fidelity because they are one of the big retirement funds and big pension funds, and they have trillions of dollars under allocation. So if they actually come out with a report saying that people should allocate roughly 5% of their portfolios to Bitcoin, then people are much, much more likely to listen to someone like them than any crypto expert or crypto news site, because they are like someone that a lot of investors will actually trust. And if they are actually signaling that's what they're going to do with their portfolio, then you know that Bitcoin is actually going to go up sooner or later. Because once that giant injection of money comes in from Fidelity, if that's what they're going to do, then, it's like game over. And anyone who's invested in Bitcoin will be very, very well off. So that is the news for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.